500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hey everybody, Jake here at TrendSpider to go over another video in the technical analysis series. Today we are going to focus on Bollinger Bands. What exactly are they and how you can add them to your account on TrendSpider. So the first thing that we'll go over here is really just a background of what a standard deviation is. So a standard deviation is something that really measures the distance between a set of values and the mean. So for example, if you have a very close set of values within a specific range, let's say that you're looking at the weather in San Diego, right? It's pretty much the same every day. Now, compare that to something like Denver, where you can have a 95-degree day on Monday and then it's snowing on Wednesday. The standard deviation of the values that you're looking at the temperature, over let's say a month are going to be big. Visually, you can see this on the chart looking at simply the standard deviation, the Bollinger Band on the TrendSpider chart. So you can see here that we've got the lower Bollinger Band. We have what I'm going to call the basis moving average. And then you're going to see the upper Bollinger Band here. And the lower and the upper band by default are two standard deviations outside of the average. Your average here is just your simple moving average. Now you can change this. I'm calling it the basis moving average because it's the basis on how the Bollinger Band looks, two standard deviations out. Now, if you want to change this, and let's say that you want to use your moving average, kind of the basis moving average as an exponential moving average or some other type of moving average, you can do that. So if you want to add the Bollinger Bands on TrendSpider, simply click the indicators here and just type in Bollinger Bands and it will pop up here. Scroll down, you'll see that the length that we're looking at, that simply means how far back are we measuring the average. So in this case, we're looking back 20 weeks because we're on the weekly chart on Home Depot. The deviation up and the deviation down are just looking at, in this case, two standard deviations up, two standard deviations down. And if you want to learn more about standard deviations and how all of this works, I would definitely recommend simply just Googling the normal curve statistics, and you can probably get a lot of information on standard deviations if you're still having trouble understanding them. So the offset is just simply looking at how far are we offsetting from the last candle. So we talked about this in a previous video using the Ripster MA clouds. If you don't want any offset, meaning that you're just having the most recent candle in line with the moving average, it's going to be an offset of 0. If you want to offset, let's say 3 weeks, then putting in 3 on the offset is going to move the moving average to the front 3 weeks. So you'll actually see the moving average in front of the most recent price, which to me doesn't really do a ton, but some people use the offset. Price close dash right just means that's what you're using as your price source as the average. So if you're looking at the last 20 closes, that's what the price source means. So the back opacity is just changing the back of the Bollinger Band area. So for example, here, if we just go to the one I have up, if we change the back opacity to, let's say, yellow, and we make it a little darker and click apply, you'll see that you now have kind of this zone or this area highlighted in yellow. So sometimes that's helpful for people. I personally think it can be a little noisy. I know what the range is just based on the upper and the lower band as well as the moving average. So let's right click and go back to some of these other properties here. So you can make this as dark as you want, as light as you want using the back opacity. And then the upstroke and the midstroke and the low stroke are just simply the upper band, which is upstroke. The midstroke is just the moving average that you're using. So in this case, you can see here that we're just increasing or decreasing that by moving this around. And then the low stroke is just the lower Bollinger Band. So in this case, if you did want to change, your price source or anything like that, you just click the drop down menu and you can do that. But in this case, we're just using the simple moving average. Now let's go over kind of how you can visualize this, looking at tighter ranges and then huge moves in price. So in this case, you can see back in 2020 when we had the COVID drop, notice that this huge drop in Home Depot from 246 all the way down to 141 made the Bollinger Bands expand, because now that range of prices that you're looking at over the last 20 weeks is huge. Before, we were trading in a pretty tight level. So you can see the Bollinger Band upper and lower bands are trading pretty, smoothly. Now, when you have an erratic move like this to the upside or the downside, you'll see these bands really expand each way because now you've got a much bigger range around that average, in this case, just the 20-week average. Now, if you have a tight range like this, that's when the Bollinger Bands get very tight, and you can see that they're almost kind of just trading in a straight line. That's because if you look here from August 2020 all the way really to March of 2021, the price traded almost in a very, very defined range. And so over time, over those I don't know how many weeks this is. I would say, 40-ish weeks. So what, August to March. So I don't know, 30 something weeks. As this range continues to just trade over time, the Bollinger Bands will start trading. It's kind of like looking at that San Diego average temperature, right? It doesn't change much. So, the average is going to be pretty flat. Now, if you look at, as I mentioned, Denver, this is kind of your Denver weather, where you've got these crazy moves. And so your standard deviations are going to be a lot bigger. Maybe your average in Denver is 75, but your two standard deviations out of that is maybe 95, where two standard deviations out of San Diego is 79 degrees with an average of 75. So just try to look at it in kind of temperatures, in average temperatures in a city that's got a pretty low range, and something like Denver that's got a really big range in temperature swings. So as the price started to move up and we started to get a pretty big move, the Bollinger Bands are expanding because now you have a larger range that you're looking at. And that bigger range creates this kind of expansion of the standard deviation as the average is moving up. So you can see here that this is just as I mentioned, just your 20-week simple moving average. And then as the price starts trading in more of a narrow range, you can see that these Bollinger Bands are starting to get a little closer to the mean. So hopefully this video was helpful understanding how Bollinger Bands work. This is definitely something that you want to have at least some type of background in just the normal curve in statistics, because that's really going to help you understand how this works. I'm not going to go too much into the strategies because there's a ton of different strategies that people will play here. Some people will play a breakout of the upper band. Some people will wait until there's a mean reversion back to the moving average after a move to the upper band. So I'm not going to get too deep into strategies, but definitely, hopefully this is a starter video to understanding how these Bollinger Bands work. And hopefully this video was helpful understanding it a little better.